KNM Group plans to list its indirect wholly owned subsidiary Borsig on the main board of the Singapore Stock Exchange Securities Trading. It intends to do this by way of an initial public offering with a view of achieving a market capitalization of up to $300 million and a placement of 49% of the enlarged capital comprising vendor and or new shares. In a board filing, KNM said its board of directors has approved the proposed listing and has on December 15th appointed Singapore-based Prime Partners Corp Finance to act as the issue manager, underwriter and placement agent. The board has also appointed Manifold Partners to act as the arranger for the proposed flotation. KNM said this exercise forms part of the group's regularization plan, which is to be submitted to Bursa Malaysia in due course and to address its current Practice Note 17 status. It adds that the details of the proposed flotation, financial effects to the group and any other development will be announced in due course after the prospectus has been finalized. To recap, on December 1st, KNM had announced that the proposed €220.8 million sale of Borsig had fallen through after KNM decided to not extend the deal's long stop date from the latest November 30th deadline. The move had raised questions on how the group would meet its hefty debt obligations. It has term loans amounting to $23 million and €68.5 million supposedly due at end November following a payment extension previously. KNM had been designated as a PN17 company in November after its external auditors, Messrs. KPMG, had flagged a material uncertainty related to going concern in relation to its financial period ended June 30th, 2022. As at end June, the group's current liabilities exceeded its current assets by $110.78 million. The government is implementing a targeted electricity subsidy from January 1st, which will see all domestic users being exempted from the tariff hike arising from the latest adjustment to electricity rates through the imbalance cost pass-through mechanism. Also exempted from the tariff hike are farmers and animal breeders, as well as lower voltage non-domestic users such as micro businesses, small and medium enterprises. Announcing this on Friday, Natural Resources, Environment and Climate Change Minister Nik Ahmad said the government has allocated $8.74 billion in subsidy to ensure domestic users and low-voltage non-domestic users will not be subjected to any tariff increase following the adjustment. Prior to this, the previous government had allocated $5.8 billion for electricity subsidy in the face of escalating coal prices, which makes up nearly half of the country's fuel mix for power production. The ICPT mechanism ensures additional fuel costs are passed down to end users. Nik Nazmi said medium voltage and high voltage electricity users among industry participants, including multinational corporations, will be charged a surcharge at the rate of 20 cents per kilowatt hour starting January 1st. He said the government has allocated a total of $10.76 billion in subsidy through the ICPT mechanism. Noting that the actual cost of subsidy to maintain the current electricity tariff is $14.91 billion, he said that with this targeted subsidy scheme, an additional allocation of $4.16 billion, which would have gone to bear the cost of electricity subsidy, can now be allocated to help the rakyat. In a BOS filing acknowledging the change, national power provider Tenaga Nasional said that the impact of the ICPT implementation is neutral and will not affect its business or financial position. Dagang Exchange was among Bursa Malaysia's most actively traded stocks today following the news that Silterra, Malaysia's indirect shareholder, was looking to block a series of board appointments. The stock slipped to a low of 48 cents on Friday morning, down 7.7% from Thursday's close of 52 cents. The counter has fallen around 38% year to date. DNEX's share price managed to claw back some of its losses by Friday's close, ending 0.96% higher at 52.5 cents with over 85 million shares transacted. Hong Leong IB Research maintained its buy call on DNEX but trimmed its target price to 93 cents from RM1.08 to reflect the scarcity premium of a listed wafer fab foundry on the local stock exchange. DNEX had announced on Thursday that Beijing Integrated Circuit Advanced Manufacturing and High-End Equipment Equity Investment Fund Center, via its special purpose vehicle Tethistronics Technologies Company, had decided to commence arbitration proceedings against DNEX Semiconductor and Silterra. The development came on the heels of the appointment of 4 new directors at Silterra by DNEX, which CGP deemed as illegal, invalid and void. As HLIB understands it, unless otherwise unanimously agreed upon by CGP and DNEX in writing, Silterra's board shall consist of not more than 5 directors and the composition of the board shall be mutually agreed upon by both parties in writing, and Silterra's board shall, at all times comprises 2 persons appointed by DNEX and 3 persons appointed by CGP. The research house said that according to DNEX's management, the development will not impact Silterra's ongoing operations as it is an issue involving the board. DNEX has been in a legal dispute with CGP over its 60% stake in Silterra since November. The issue was that one of the conditions for DNEX's acquisition of Silterra was that Silterra had to be 55% owned by a Malaysian company or else its manufacturing license would be revoked. EcoWorld Development Group's net profit tumbled 95.85% year-on-year for the fourth quarter of FY22 to 1.78 million from 42.84 million previously, dragged by the impairment of its investment in the EcoWorld Ballymore JV in London. Revenue for the quarter fell 16% to 559.3 million from the 666 million posted in the fourth quarter of FY21. Despite the lower earnings, EcoWorld declared a third interim dividend of 2 cents per share, which brings the full-year total dividend to 5 cents per share. As for its full-year report card, EcoWorld saw its net profit decline 14% year-on-year to 157.2 million, despite revenue increasing marginally to 2.044 billion from 2.043 billion, driven by the performance of its Malaysian projects. On a positive note, EcoWorld achieved the highest ever sales of 3.84 billion in FY22, exceeding its sales target of 3.5 billion and surpassing the previous record high of 3.82 billion in FY16. In a separate statement, the group's president and CEO, Datuk Chang Kim Wah, said the group's next focus will be on launching more innovative products that meet the lifestyle needs of a multi-generational and multi-ethnic customer base. He explains that EcoWorld products that have achieved sold-out success in Klang Valley, such as its Duduk series of apartments for young suburbanites, he says will be further refined and introduced in Iskandar, Malaysia and Penang. Chang explains that EcoWorld also aims to increase the number of sizable new industrialists at its business parks, saying that their presence can have a very catalytic effect to draw in other upstream and downstream businesses. He added that EcoWorld will be maintaining its annual sales target of 3.5 billion ringgit for FY23. VS Industries' net profit for the first quarter of FY23 jumped 54% year-on-year to 60.7 million thanks to higher sales orders from existing key customers. Revenue for the quarter improved by 34% year-on-year to 1.29 billion from 968 million previously. VSI also declared an interim dividend of 0.5 cents per share. Reviewing its performance, VSI said the Malaysian segment posted a 62% increase in revenue for the quarter due to higher sales orders from key customers. Meanwhile, the company said losses in China narrowed to 2.8 million from 3.2 million a year ago. As for its prospects, VSI says challenges are abound for the current financial year. It said global macroeconomic issues such as rising inflation and interest rates had led to rising cost of living and in turn affect consumer sentiment and purchasing power. However, VSI says that at this current juncture, the order flow from its customers remains satisfactory. Barring unforeseen circumstances, VSI's board opines that the financial performance of the group for the remaining quarters will be satisfactory.